Joining us for a conversation is Dean Taylor, the CEO of Diamcor Mining. Mr. Taylor, thank you for joining us today, sir.
No problem, Maurice. Happy to be here.
Well, it's a pleasure to be speaking with you today to have you introduce to us Diamcor Mining and share what may be a once-in-a-generation opportunity. Before we begin, Mr. Taylor, please introduce us to Diamcor Mining and the opportunity the company presents to shareholders.
Well, thanks, Maurice. Diamcor Mining we're a production-focused company. What we do is we basically take non-core assets. We acquire them from groups like De Beers, things that have the ability to provide us with the potential for near-term production for obviously rough diamonds. And what we do is we acquire those projects and we try and get them up and running and into production as quickly as possible so that we can supply rough diamonds to various groups that we have around the world. We have our tendering facilities in Dubai, and we've got a long-established relationship and a proven history of producing rough diamonds. So that is essentially what we do. They're in great shortage right now, so timing-wise, we think we're perfectly positioned right now, and we think it's a great strategy.
I couldn't agree with you anymore. I'm excited to have you share the unique, and I do mean unique, value proposition before us in Diamcor Mining. But to truly appreciate this opportunity, can you please provide audience members with a quick intro into the diamond space with what I would call Diamonds 101? And in particular, can you share with us the difference between gem diamonds and rough diamonds?
Sure, Maurice. The diamond industry is really an interesting one. It's not really that well known. Other than, of course, you have two major groups. You have the two biggest players in the industry are essentially De Beers and also Alrosa, which is the Russian government, which is obviously a bit of an issue right now in terms of what the buyers want to see. The diamond space it's not widely understood. It's not like gold or anything like that. If you look at the two biggest players, there's about 130 million carats, roughly in that ballpark a year of rough diamonds that are produced. That's what the world has been eating in terms of the sales and things like that. It's been pretty consistent. The mines are very, very well known. A lot of them are getting old. A lot of them are going down in production or shutting down. And there's nothing really new that's been found. When we look at De Beers and Alrosa, they produce, each one of them makes up probably about 35% of the diamond market. So about 70% was between those two groups. And the rest of the rough diamonds in the world come from, probably about 12 or 15 other groups in the world. So it's a very, very tight space, very hard to get rough diamonds, and especially gem quality diamonds, probably somewhere around only about 20 or 30% of what comes out of the ground is what we refer to as gem diamonds, which ultimately end up in jewelry. The rest is industrial. Our project, we think, we know that from the stuff that's produced in the history of Venetia, it's probably somewhere around 60% gem or near gem quality. And that is what everybody is essentially looking for. So it's a really interesting time to be in the diamond space. Of course, the conflict between Russia and Ukraine, the sanctions, everything that goes along with that, has largely eliminated any desire for the main players to want to buy Russian diamonds at this point. So it presents some really interesting challenges for supply side, and I think we're perfectly positioned with our Krone-Endora Venetia project to start ramping up and supplying good quality. We've seen it in the pricing and everything else. So we feel like the company is at a real inflection point right now, and the industry is really, really an interesting one where if you've got rough supply, you're kind of in a perfect position right now.
You certainly are. Now, let's find out more. Mr. Taylor, take us to South Africa and introduce us to your flagship Krone-Endora at Venetia, and please share with us how Diamcor Mining is positioned to provide the diamond market with both gem and rough diamonds, as the company has just released sales from the diamonds recovered from your processing of quarry material at your Krone-Endora Venetia project.
Sure. We acquired the project, as some people know, some won't. We do have a strategic alliance with Tiffany, which obviously was recently purchased by Louis Vuitton. obviously one of the best names in the industry. Tiffany's is actually a shareholder in the company, and their involvement really came from wanting to secure supply. A lot of the bigger guys, as I've said, the supply side of things is not great before, and it's actually really an issue now. So these groups really look to find non-conflict diamonds. Our project is co-located, and when I say co-located, with De Beers' flagship Venetia mine, essentially the two projects are located together. What ours is the top 1,000 meters of Venetia. De Beers' estimate was the top 1,000 meters was eroded off and shifted. So it's a very rare fan type deposit off of Venetia with the same material. It's in the northern part of South Africa, so a very good area in terms of weather. And you can imagine the benefits that we have when you've got a $4.5 billion mine that essentially De Beers has developed, and literally we coexist. So in terms of suppliers, everything else, it's very, very it's a very, very good situation for us. We have a very large land position. The estimate is somewhere in the neighborhood of 1,000 vertical meters of the pipe was sheared off, and just a fan deposit right beside. So our project's very, very simple in that what we do is we essentially run a large gravel pit or strip mining operation. We never go underground. There's no blast or anything else. Our job is to basically strip mine off the top of that material that's been displaced, put it through different processing plants we have, extract the diamonds, and send them to market. And as I've said, very high percentage of gem and near gem. And as we've seen in the sales, we average somewhere around anywhere from $175 to $250 a carat US on average. That's about 2.5 times what the worldwide average is, a reflection of the gem. And we also get big stones. Our largest to date is around 91.7 that we recovered a couple of years back in the development of the project. Just recently, we've announced that in this last run, we've got a 59 carat and a 21.8 carat, I believe it is. And those can be extremely valuable. They, like I say, they run into the thousands, if not tens of thousands of dollars per carat is what they're potentially worth, is when they're gem quality. So the project itself, like I said, it's you've got a good operator with a proven history, a lot of development done, obviously a strategic alliance with one of the industry leaders, and a project that's co-located with a giant. So it's a very interesting project, and the development of it is basically at the point now where we're sort of off and running. It delayed us a bit, but now we feel like we're in excellent shape going forward here.
Well, this is a true testament of the geological and business acumen here. 59 carats and 22 carats, and you say it so mildly.
Yeah.
Or modestly, I should say.
The potential here, we know that there's De Beers' largest to date out of Venetia is around 315 carats in size. So we do expect we're going to see, some larger stones. There's certainly the potential for individual stones up to even as much as, like I say, in that 300 to 400 carat range is definitely possible.
I'd like to go back to Tiffany's and your relationship. It seems to be a strong fiduciary relationship. First, you're a supplier, but they're also a world-renowned name, as we all know, in the diamond industry, and they're shareholders of Diamcor. Why?
Yes. Well, when we discussed this, when we looked at acquiring this from De Beers, we were chosen. It was a competitive process. We were chosen from probably around 10 to 12 different companies that tried. It was a long process, took a couple of years. Certainly Tiffany's involvement, their legitimacy. I mean, I can't say enough good things about the Tiffany's group. They've been very supportive. They really, what they were interested in was the supply. That's the big thing. When we did the deal, they provided us with about $10 million in exchange for essentially a first right of refusal, and it is a strategic alliance. So they are a shareholder. They did provide that capital to try and expedite getting things going. As you know, with mining, it takes a long time. It takes a long time to acquire it, permit it, build it, get it going, everything else. It's quite a long process. And so, the whole idea with Tiffany's is they're looking for the best of the best. I can honestly say that over the years of dealing with them, there's absolutely no question that anything that you see in their stores is the best. So when we look at even the production that, or the run of diamonds that we get from even the trial mining exercises right now, Tiffany's is only interested in the very, very, very best of that. We have about 150 other buyers when we take the goods to Dubai that we sell to. But it's a symbiotic relationship in that, they obviously need good quality product for their stores. And so we're able to provide that in, a smaller way than, say, some of the larger ones like De Beers would. But essentially, that's really what they're after. It's for them. It's all about supply and how difficult it is to get supply of rough diamonds. And of course, like I say, in the last number of months here, unfortunately, with the Russia-Ukraine situation, Russia diamonds, which was probably a third of the rough diamonds in the world, has now effectively it is just no longer an option for them. So it's like I say, we could not be happier with that particular situation, and it's not an off-take. They don't get a discount or anything. They're more than happy to pay fair market value for the stones that they want, and that is the deal.
So you have gem quality diamonds in a positive diamond market. How are you taking advantage of this market with your processing capabilities, and what can investors look forward to in the short and long term?
Yeah, or see, it was really unfortunate, the COVID situation. We were really looking at, as I said, you go through things where you acquire it, you permit it, you build, you test, you refine these massive plants. I mean, our plant, at the front end of it, we'll do up to as much as, let's say, we're targeting as high as maybe 500 tons an hour worth of material going through. So very, very large operation, very big infrastructure, a lot of equipment, power lines, underground water, everything. We're completely done the development and the permitting phase. So when we look at everything right now, really, our situation is really quite good in that we do have that ability to provide those high quality diamonds. COVID, like I said, was really unfortunate. We were ready to sort of ramp up and really start doing a lot more volume when COVID hit. Obviously, that stopped everything. Our big shareholders, we've got awesome shareholders, amazing people involved, long-term guys. We all put money in to keep things going. We survived COVID. And so right now, in the last sort of 6 months as we've gotten through COVID, we've survived the onslaught of that, and now it's all about ramping up. So that's what we're doing right now. We're going to see increased volumes, increased carats, increased revenues, more frequency of big stones. And then as we get into the end of the year, we've got about 5,800 hectares, which is almost, somewhere around 15,000 acres. So it's a massive area. As we get into the end of the year, now with all the plant developed and everything else really running and everything set, we'll now start to go from not only just increasing the amount of processing we're doing and revenues going up, but we'll also start expanding into the outer areas and finding where the brunt of the higher grade areas are, and then move into those over the next over the next number of years. So it's kind of when we look at things right now, it's a very high quality project with high quality people involved. It's got the potential for immediate, obviously it's cash flowing already. We expect we have the potential even this quarter to go to profitability, and obviously these big stones make a big difference. And then as we go forward, it's all about growth and expansion into those other areas. So the next, we think we're at an inflection point right now. Without question, we feel that that's the potential to really make a jump in this quarter, even and the next one. But then even after that, our plans are to further expand and grow as we go forward. So it's essentially a near-term production scenario with a lot of growth built into it and upside. So that's what attracts many buyers, as well as Tiffany's, to us. Is it's non-conflict, really high quality. Good stones, good rough diamonds, exactly what they're looking for. And their big thing is, with us is, go faster, get us more. That's the name of the game right now.
Well, they're not alone. I'm a shareholder and I feel the same way.
Yeah, for sure. Yeah, that is the effort right now. I think, like I say, I think shareholders will be really happy this quarter. Sometimes with these deals, like with mining especially, it kind of, it's tricky in that it takes a long time to get it to a certain point, and then once they finally do, everybody tends to get a little fatigued at the end, and then all of a sudden, boom, it goes, and it's like, gee, why didn't I see that coming? So it's an interesting time, like I say, but for us right now, I think the biggest thing really for us when people say, well, what's risk or anything else involved. To me right now, and like I've said to all our key guys, is operationally, it's all about execution, guys. That's all there is. The deal's good, the diamonds are good, everything's good about it. We just need to make sure that we demonstrate our ability to ramp it up and get things going. And so we feel like we're, this quarter has been really good. And like I say, these big stones like that, good 7-8 carat diamonds that are good quality will bring 8,000 a carat US. So we expect that these, the 21 and the 59 will do very good, and certainly, they add a lot of, a lot of potential in the cash side of things to the picture on top of what you're already doing. So they really launch things ahead.
Well, a number of virtues, and I'm hearing a number of catalysts, and that's exactly why I'm so honored to have you on the program with us today. In terms of news flow, when can shareholders expect to find out the results from this drill program?
Well, the different programs we've got, what we'll see coming up, we're not, honestly, we've spent a majority of the money that we bring in. We've sold a lot of diamonds, 150,000 plus, over the development of the plant even. We've put probably close to $100 million over the years into the project. News flow, we've never really been pushed that hard on the news flow, but as a public company, my personal feeling is if you don't have any positive news, there's no sense in wasting shareholder money to basically say nothing. But what we'll do is as we go forward now, you'll see that we just put out the announcement on the bigger stones and what we delivered and the results of the sale early on. I mean, we're 3 weeks into the quarter, and we've recorded probably $500,000 US of revenue already. Obviously, we'll have another sale here at the end of August, another one in September. When those sales occur, obviously with the big stones, rather than guessing what they're worth or trying to estimate, the best thing is those are in, they'll go up to tender, and we'll certainly announce what those are worth. And I think guys will find it is, in a sense, it's material to what's going on. And then news flow from there will really start to kind of pick up as we work on expanding, getting volumes up, ongoing results, things like that. And then into the end of the year, we'll certainly start talking about moving out into other areas, doing a lot of different drilling programs, a lot of bulk sampling, and really trying to define where these trap sites are of higher grade and a lot more stones to come. So it's a very exciting time. And like I say, I think you'll see as we go forward here, there will be real news, and to me, I'd love to have a release every week. If I have real news, I'll do it. If I don't, then typically we keep our shareholders abreast of what's going on and stay focused on what we're doing. It's all about results, I think, Maurice.
I couldn't agree more, sir. Leaving the Krone-Endora, sir, let's look at some numbers. Mr. Taylor, please provide the capital structure for Diamcor Mining.
It's our capital structure very tight. It's a very tightly held company. We've got about 120 million shares issued and outstanding. Largely that number, we always kind of thought we would stay under 100 million, which is a crazy low number especially for a mine that's built. Usually you're in the 400, 500, 600 million or more even. We've kept it very tight, but it is very, very tightly held. If we look at management, if we look at our key shareholders that have been there since the beginning, a very large percentage of the stock is held by probably 15 guys. And 15 very, very long-term, very knowledgeable guys of what's going on in the industry. They recognize that, our current market cap, like I say, when we look at things, I think at one point we traded as high as probably $1.60 or 70 a share. The market cap was probably in the neighborhood of 100 million. Obviously, with COVID, with everything that's gone on, people get a little fatigued. And so when we look at our market cap now of probably around 25 million or so, it's a little bit hard to stomach when you've spent 100 million getting to this point. But these mining deals typically do that. We understand the reason why the market cap is there. And quite frankly, it's like the old saying goes, price comes to value. So like I've said to everybody, on our side involved, it's a show me phase. Nothing matters right now other than results and getting things moving. And once we demonstrate that, which we think that we will do this quarter, we think we're doing it right now, and that will get recognized. And as we get recognized, the market cap will go up. But it's tightly held. It's like I said, we have very, very good shareholders, and we're extremely pleased with where we sit. A majority of the dilution we suffered in the last year or so, that really came from essentially it wasn't a rights offering, but essentially when we had to survive COVID, every single person, whether it was management, big shareholders, everybody else, did their proportionate share, put in money so we would survive. Essentially, our shares went up, but the shareholdings essentially stayed the same for everybody. So the goal was to just survive COVID. But attractive share structure for sure. That's one of the things we like.
Now, before we close, Mr. Taylor, what would you like to say to shareholders?
Well, I think that, in my opinion, with this whole thing right now, my message to people would be, to have a look at the project, have a look at the company, have a look at everything that's involved, and understand what's going on in the rough diamond space and how difficult it is to get a hold of rough, and anybody that does have rough, what the advantages and what the benefits of that are. I think that as we go into this next sale, we see these new stones. It's just a very, very key inflection point here that I think warrants, people having a look at. I think, like I said, it's cash flowing. Obviously it has the potential to go to profitability in this quarter. We're getting big stones. We're ramping up. We have a strategic alliance with Tiffany's. It's a De Beers deal. We're co-located. Infrastructure's done. Permitting's done. There's just so many different positives that I think if a person does their homework, they'll realize that it is a very good value proposition right now. And so I think that if they do their homework and due diligence, and obviously if they have any questions, we're always here to answer any questions and go through things with them. And I think once they do their homework on it, they'll realize the same as a lot of key shareholders have, that it's a very interesting company, and it has a tremendous amount of potential, and it depends, tremendous amount of growth potential, and the ability to generate, cash flow, earnings, all those good things, which you don't typically see in junior mining.
Last question, sir. What did I forget to ask?
I've done a few presentations over the last sort of kind of month and a half, and I think, the common question that everybody says is, what could go wrong? What keeps you up at night? My answer to them is really simple. I'm extremely comfortable where we're at, and everything right now just comes down to execution. We've had some very, very good news and good things going on here at the beginning of this quarter. I think it's going to continue. So really right now, that's what I'm looking for personally. I don't think there's anything that can go tremendously wrong other than just execution. And the more we execute, the better it's going to be. So I'm really looking forward to, this September ending quarter and the December one. And, I think those are, I think we're going to have some fun here going into the end of the year. So, I'm very optimistic as to where we sit and what's going on right now.
Oh, looking forward to it. Mr. Taylor, for someone that wants to learn more about Diamcor Mining, please share the website address.
Our website's it's Diamcor Mining, or Diamcor, sorry, not Diamcor Mining anymore. We've simplified it to Diamcor.com. They can certainly go through there. They can get our information on there to contact myself or Rich Matthews. Mark Smith is always around. It doesn't matter, like I said, how big or small the shareholder is or who it is. If somebody wants information and wants to get a hold of us, our phones are always on, and we're always happy to talk to people and give them as much information as we can about our company.
Mr. Taylor, it's been a pleasure speaking with you. Wishing you and Diamcor Mining the absolute best, sir.
Thanks, Maurice. Thanks for the time.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.